Officially. Good morning and welcome out everyone to the Market Watch Group Weekly Market Prep. As always, my most favorite day. I've got a fresh, full cup of coffee. One of the worst things that happens is if I start a little early and I start our meeting with a half a cup of coffee and then I run out before the end. I'm just like, today my cup is full. My cup is full. Okay. My name is Scott. I'll be your host. Here's our disclaimers. We're not brokers. We're not advisors. We don't give guidance. We don't give recommendations. But I'll tell you this. I'm super excited. Here's the agenda. Market posture. Economic calendar. What's coming up? Hint. Inflation. Sector searching. We'll do a little watch list maintenance. We'll put together what we believe our early week candidate list will be for potential trade opportunities, and then we'll talk about our last week on this second round. No, third round. Are we? Oh, the NVIDIA split. That's happening. You're right, Bob. You're right. Have we had two passes at the trading plan? Or three? 2 months, 2 months? This is the third. Third. Oh. Okay, here is a quick temperature check. Okay. Yeah, so it's completed, which means it goes ex-dividend on Monday, I believe. Ex-dividend means it trades at the adjusted price. I believe it's that day. So I think it will trade at the new price, and then everybody has 10 times as many shares. Very exciting. Yeah. Okay. Let's get into it. Let's get into it. Market posture. Where are we? Where do we think we're going to be? Steven posted. Appreciate that. They will be cheaper. Yep. They absolutely will be around 120. We'll still see it at the pre-price, and then we'll be able to look at what it becomes. We had a great, if anyone missed it, we had a great brainstorming session on Thursday night. All of which are going to be implemented, all these new things we talked about to try to improve some things. So very excited about that coming up. All right. Okay. Oh no. Hold on. My Thinkorswim is locked. Wait a second. That's not good. All right, hold on. I can't even get it to close. It's locked up. Give me a second. Apologies. Okay, has two things. Two things while I'm reloading this. Is there anyone who is expecting to migrate to Thinkorswim that hasn't migrated to Thinkorswim? And if anyone has migrated recently, any issues? But what I was going to do, this is what I wanted, a temperature checkup, because we're getting ready. We only have one more week before we move on to a new round. So for anybody who's new or relatively new listening to the recording, you have a chance to start on your trading plan. We're going to do 1 week per section. And honestly, I would say an hour's worth of work. And if you are watching the videos, give yourself an extra hour for those. But 1 hour of work is all we need on the videos. I want you to give me right now, on a scale from 1 to 10, how strong is your trading plan right now? 1 to 10. Self evaluation. Rate your trading plan for me. Um, 7. Steven says Bob is a 6. Mike is a 4. Sandy's a 6. Greg's a 5. Okay. Okay. I love it. I love the honesty. Um, the objective. I'm not saying like, well, let's get it to a 10. The objective is an 8. I think if you self assess at an 8, your confidence level, that's 8's the goal. That's what we just established as a group. 8 is now the goal. So one of the things that we maybe want to do, in fact, maybe we'll do this on. So Glenn's going to meet with us on Tuesday night. He's going to present Tuesday night. I'm going to still do Thursday this week. And I think what I'm going to do is talk about a trading plan assessment and prioritization, right? Because sometimes you might not, as we go through and take 8 weeks on our trading plan, I don't think you always need to spend 1 week on every section. You might have section 1, which is your personal summary, section 5, which is your routines, those section 2, which is your market posture, right? You might know that you're continuing to work on your efficiency at it, but the routine itself, you don't need to keep redoing those sections. So you might start, and this is another thing I just thought is, yeah, it doesn't always have to be the exact section. So if you feel like your section 1 is good, what you want to do is identify 1 or 2 other sections where you say, this is my weakest. How about that? Here's the follow-up question. If you know it, what's your weakest section? What's your vulnerability in your trading plan? That's what we should always have. We should always have, what is our current rank and what is our weakest section? Weakest equals highest priority. Because I think that if you say, oh, you know what, my section, and where am I on that scale? I probably would say my trading plan strength fluctuates between a 9.1 and a 9.4. And it's a funny thing, right? Because my kids growing up would always be like, you never score anything at 10. Like, never. There's nothing ever gets a 10. If it's perfect, then there's always something. They're like, I don't know. I think that drove them crazy, especially in sports. But that's just how I see it, right? Like, if they would ask me how I assess things, I'm like, yeah. I'd make a nice dinner. They'd be like, what do you give that? I'd be like, that's a 9.1. Everyone's like, that's a 10. I'm like, that's a 9.1. I'm like, that meat could have been seasoned just a little bit better. Life would be boring then. Thank you. Sandy sides with my kids and says Mimi. So yeah, but it took a long time to get there. I can tell you that. Okay, so yeah, what I would say is that. So for those of you here, you're the first ones. Take the time to identify that one section where there's just you're not as comfortable as you want. And that way, when we go through, you don't get bored like, oh, I have to go through my personal summary again. I've done that. And then all of a sudden you're off track. No, don't go through your personal summary. Some of us might want to review personal summary. Some of us might be going through the trading plan for the very first time. And this is the first time they've ever sat down and worked on their strengths and their weaknesses and their commitment and their discipline, right? And really sat and thought, like, what am I doing here? What am I expecting from this? How am I going to make sure I'm in the right place to get what I want? But others are going to say, oh, we're on section 1. This is where I take the time to work on section 4. My risk management, I've got to clean it up. Or I'm working on section 3. That's my trading rules. I know I can do better. I'm gonna, every time we get to a section where I'm like, yeah, this, maybe you'll even start giving yourself, individual. Like we do the market. We don't just say, hey, what's the market? It's a 7. We say, hey, I need to look at the long-term trend, and then I need to look at the short-term trend, and we break it down. Same thing. Yes, let's overall score our trading plans. Break down each section. Personal summary. Rate it. Do you like it? How does it feel? And when you get it above a certain number, right? If you've got everything's above 7 and then you have one thing sitting at a 5, it stands out. This is what I mean when I say I feel like the more we can make our decisions data oriented, even if it's somewhat subjective data, it's data. You clean it up as you continue to use that data to say, hey, every part of my trading plan is good, but this part's not. So I need to, that's where I'm focused. Anyways, okay. Market posture. Trading plan. Let's go. 5.5. We've been improving. I believe that I said, if anything, I think I might be up another 1/4 of a point, but let's just see. Let's start here with the long-term trend. We're at a 1.5. Let's get our chart over there. Where are you, chart? Detach. Let's get you open. Let's close you down. And SPY. And let's get to 3 years. Let's get my other indicators squished down a little bit here. Ooh, make sure that price stands out. Okay, what are we thinking here? I think we're right on point. It could keep going a little bit more. We don't know yet. Right? It looked like it was starting to stall, but then we went a little higher still. Out of 2 points, I'm at 1.5. That's a strong score. You know, based on the discussion we had, how unlikely it is we ever see a 2. Ever. Which is funny because 15 years ago when I first started doing this type of a process, I did hit 2s and 1s. It's part of what shaped the thought process. It can't be a 2, because if that's the strongest I've ever seen, I'd still hesitate, because I'm like, well, what if I put it at 2 and then it gets stronger? Now I'm stuck. I can't really, right? Like, it's just, and that thought process actually stabilized my market posture scoring, right? Where it's like, it's a 2, it's a 0, it's a 1. It's like, whoa, this thing needs to be way more steady than that. So we have to find a way, right? And so what I do now is a result of that. And I think that other people will find a bit of their own style. And that's the whole point, right? It's not learn to read the market how I read it. It's learn to read it the right way, and then you process that into how you trade. Because the way we process the market is about what we see. What do we empirically see happening as representation of supply and demand? That's it. Everything else informs that. But as market technicians, we believe price is king. That's it. Price tells us what we need. Long term, 1.5 looks good. Tell me if you've changed yours as we go. Let me get my chat back up. Where is it? Where are you guys? There it is. How do I know which set of lines to use? So like, for example, right here, I feel like for me, these lines, and you might use different lines. And in fact, I would actually say what I would do, hopefully you have 2 screens. I hope you have at least 2 screens. If you don't have 2 screens, definitely get 2 screens. Any computer, laptop, regular computer, you can literally plug and play a second screen. You can set them up side by side. You will be so much more efficient in your work, etc. And you can get a great monitor at Walmart for literally like $90, 22-inch monitor. Definitely. But what I would recommend you do is have your SPY that you're scoring while you're watching, so you're not influenced by my lines. I love on the SPY. You'll notice really no other chart looks like this. No other chart looks like this that I look at. Only SPY, because this I love having the ability to go back and remember when I had these red lines. And you're like, oh, Scott, are you saying that you always remember? No, of course not. You guys hear me. I'm like, oh, when was this from? And oftentimes you guys remember better than I do. So you're welcome, because look at how you have these reference points of like, ooh, we were scoring the market stronger here and not as strong. And yes, it looks sometimes crazy. And there are times that I probably should clean up a few of the lines, right? Where I'm like, yeah, that's like this old short-term trend back here is probably just not really relevant. So let's remove you. I'm gonna appease Bob a little bit today, but that's it. Only 2 lines, Bob. Only 2 lines. So yeah, I do. I like to like see and see how they intersect. This is my version of Fibonacci. A lot of people swear by Fibonacci. They're like, oh, Fibonacci's are magic. It's like it'll always find its way to bounce off these. It's not. It's if you put 6 lines on a chart and it starts to drop into them, yeah, there's a great chance it's going to sort of bounce off of one of them, right? Like, and that's my thought with this. I've got old lines. There's a good chance it's going to come down and hit one. Good, Michael. Good comment. He says, I don't really trust Fib because they don't mean anything until they already start bouncing. So you're really self-confirming. How you draw the lines. It's not like Fib just draws itself. You have to pick the starting and ending point of the line of which you want to see retracements, right? And so for me, I just figure, well, rather than going back and picking, if I just leave what I've thought from before and let it extend, I like how it informs me. So, but if you don't, I get it. Get that second screen. And yes, Sandy, get that second screen. $90, set it up, boom. You can get like, I've got this phenomenal little like desk mount I got from Amazon for like $30. It lifts both screens up, and anyway, very cool. Honestly, Bob, did you guys see Bob's quote? Even a blind squirrel can find a nut every now and again. That's how Fibonacci works. It's just which nut is it finding? I don't know. Anyways, that's why you'll notice I really don't draw fibs hardly ever. I think I drew fibs one time on one chart, and we left them for a little while. But okay, let's go forward. Short term. I think this is the short term, right? This is standing out. This is right to me. So the question is, what is that score? What did we have it? 1.5, 175? Because that's about what I would estimate it at, just looking at it now. And there it is, 175. Technically, last week, we got to a higher high. So some people might say, oh, it's a higher high. Aren't you going to score that an extra quarter of a point? I'm only going to do, like, give it add a quarter or subtract a quarter for buyers or sellers at times when we don't have a pretty clear trend in place. So like if it breaks out of a trend and if it were to drop out of this line down into here somewhere, we don't really have a new trend. So we're just like, well, let's just kind of dock or add points based on achievements during the week. But that's not where we are right now. I don't think. I think we assessed, we got to a point, then we had the ability to draw some lines, and when we drew the lines, it looked like this, and I think I'm comfortable with that. Now you might say, but Scott, it looks like it's stalling. It looks like it, but it hasn't yet, right? Like that's the point. It could move higher up here. We don't know yet. We're scoring what we see now. And what I see now is that on the short term, the buyers have regained control of the market. Now, we never gave sellers that much. Remember that. It never dropped below a 1, even though it had a little bit, right? So I feel comfortable with both of these two scores, where they stand right now. Volume. Let's talk about volume. Volume is at a 0.25, slightly positive. And if you look here, I see this day is negative. This is close. This is close, but not quite. Oh, is it? Let's see, 61.5 over 59.5. I don't think that's 5%. I don't think that's 5%. Now, if you might set your own requirements sometime. 69.5 divided by 59.5. No, that's not what it was. What was the? Sorry. That was this one here. 61.5. 61.5 divided by 59.5. Yeah, see, that was only 3%. And my threshold is 5. That's another area where, you know, some people might be like, oh, Scott, 5%, that's hardly anything. I want at least 10. When I first started learning trading, people were teaching 50% volume for breakouts. And I'm thinking like 50% extra, 150%. And some stocks never get that. You have to recognize what are you looking for. So it's it's not. That one's no good. I would say this one is close, and I think this one is 57.2 over 54.1. 57.2 over 54.1. That's see, that one barely qualifies. But here's the thing. We have to have a number, a threshold. So barely is barely. Now, if somebody else said, nope, I want at least 10%, otherwise they don't count. Well, they're not going to count either one of those. And that's fine. Their volume score is going to be less likely to be influencing, right? But as it stands, this is one above average volume day, and it was definitely the sellers. What I want you guys to notice, where's my drawing tools? What I want you guys to notice is how instrumental and significant the 2 days. I know it doesn't seem like much, but that's one of them with 5%. This is the other one, which clearly had way more than 5%. However, remember that a good chunk of this volume right here was represented by this attempt by the sellers. So the sellers tried to push it down, and then what? I mean, think back. On that day, it was pretty dicey. We opened a little bit higher, and then the selling came in, and all we had seen for the last 5 days was what? Mostly selling. Triggered by increased selling on the first day. But then all of a sudden, on that big volume day, the buyers reared up, smashed it back all the way into a bullish candlestick with big volume. So right now we have a 1-to-1. Tie goes to the buyers. So this equals a 0.25 for me. Give me your thoughts. That's where I am. That's where I'm scoring it, which means it's not changing. That's what it was already scored. It was 0.25. Yeah, that was a weird day. You guys are, I mean, it's funny because I feel like, yeah, I think that was a Friday, wasn't it? I feel like I remember talking on that day. What day was that? 5/31. Yeah. And then it was 6/3. That was Friday. Steven scored an increase where I'm now at 0. Okay. Now remember, my litmus test for positive volume is you guys see it as a 0. Fair enough. Fair enough. That's the starting point. That's the ending point. Okay. Now, if you tried to tell me you were a negative, I would be like, it's hard to attribute a negative volume score to an up move in price. Can we have a 0 score, or can we have an upward move with a 0 score in volume? Yes, 100%, no problem, right? So the difference for me between a minus 0.25 here and a 0 here is huge. It's a chasm between those two scores. It's not like, oh, it's a minor difference. In order for it to be negative, it has to, in my opinion, be no more than sideways, right? Like this. If I have a negative score and I see it up, I'm going to be like, what am I missing? I'm going to reevaluate that. And if I have that up score, there's a very good chance that for me, I'm not going to let it be anything less than a 0. It's an incline, so positive. I mean, like I said, Michael, if it's an incline and you're a 0, that's acceptable. We sometimes are like, where's the buyers? They don't have to be there. We don't need buyers. They don't need volume. They can just keep going up without volume. That's a given. So if you're a 0, I accept that. I'm only a 0.25. The difference between a 0 and 0.25 here is negligible. The difference between a 0 and a minus 0.25 here is enormous. And for me, the reason why is the litmus test at the end, where I'm just like, look, we're not really scoring this, but what did it do? It went up. It went up. Just like if it was the other way around, if I had a positive score and this thing was sideways or negative, I'd be like, what do you mean? Where how are you getting a positive score with this thing going sideways? So it's just like a little check and balance for us to make sure. Again, volume, there's times for me where volume is just like out of the equation. It barely informs, but I think it just gets us thinking about it in a way that is more important than whether or not you gave it a 0 or a 0.25. It's really taking the time to get to a granular level, assessing that part of the market and what it means. That's my take. I'm confusing you because there's no volume there. You're saying right now this is confusing? Let me go back. There's 2 days. 2 days that have anything greater than 105%. Right? 1 day for sellers, 1 day for buyers. My policy is that I give that a tie goes to the buyers. So that's a 0.25 for me. If it was a -1, where volume counts as 0, I'm not sure what that means. If you're a zero, you're a zero, right? That's the thing. Here's the thing, guys. I'm not trying to convince you. If you're a zero, like I said, the fact that this is upsloping, a zero is an acceptable score, right? Does that make sense? So for me, I'm a positive score. And I think a positive score makes a lot of sense because this is a positive sloping line. Positive sloping line, positive score, everything is A-okay. That's for me. Positive sloping line, but you're like, I don't see it, Scott. I'm a zero. That is A-okay by me as well. That makes sense. Why? Because markets can move bullishly without increased volume. It just can't. You don't need it. So, but this is where the check and balance comes in. If this were like this and you were a minus 0.25, that for me is where your analysis would be problematic. That doesn't make sense. How would we score that in a negative fashion when you don't really have an imbalance of volume for sellers? And in addition to that, the price is going up. Right? Does that make sense? What would get me to a 0.5 on this? Give me another, like literally, if I had next week, if we get one more buying day, then all of a sudden we're going to have, these are each going to move back 1 week, right? And then we'll have another one here. So now we'll have 1 and 2, and the 2 are fresh and the 1 is not. Just like that, I would probably say give it a 0.5. So remember what I said about the positive line, Mike. It's a litmus test. It's a final test at the end for confirmation. You're testing to make sure that your score makes sense, right? Does it, right? So if you scored a minus 0.25 here, I would say that doesn't really make sense. And you would say, why not? And I'd say, well, because it's sloping up. You're scoring in favor of sellers as the price is advancing higher. You have to stop and hear it and be like, yeah, I'm going to reevaluate it, right? So we're not scoring the slope of this line. That's not what we're doing. What we're doing is kind of saying, because this is a section that people have said, I don't get it sometimes. So I'm throwing that in there to give you that last little bit that says, hey, does this make sense? So if you're scoring it at a 0.5 and your line is sideways, that doesn't make sense, right? A 0.5 should mean things are going higher. There's a correlation between volume and slope that helps to make sure your line we are scoring volume, but your score has to make sense. And if you don't feel good about it, what do? You test it against the slope, right? Okay. I hope that little litmus test was an addition, because there was some feedback where it's like, I'm not comfortable with the volume score. And I'm like, okay, what can we do? Well, at the very end of it, we can just say, hey, look, does this hold water? And if it does, mark your score. And if it doesn't, go back and reevaluate it. And if you can't get it where you like it, put a 0, because at the end of the day, what it means is that volume's neither helping nor hurting your current assessment of the market. That's the plan. Okay. Because there will be times when it absolutely is informative, where it should be so crystal clear. Oh man, the buyers are clearly in control and your volume's a 0.5, a 0.75. And it helps to increase your score during times when the market's just getting going. That's the purpose of that volume. When it's just getting going, sometimes the volume will accelerate first before we get a new trend. So we can get that volume up to a 0.75. And then once we get into a trend, what do we say? We say that the volume score will naturally just shrink out of the equation. And then the next time the volume comes into play, it's because it's maybe the sellers are testing the water, and so it comes in a negative fashion. That's how the volume should swell and ebb and flow. We want it to be increasing when it's telling us, whoa, something's happening. Look at this. Something's clearly happening. We see it. And other times, it's not like we have to score. Like it doesn't have to be scored. So if volume is 0, because you're like, A, I'm having a hard time reading it, or B, the trend is well established. Once a well established trend is in place, we don't need volume pumping in and pumping out. We just don't need it. So, okay. Let's go to sectors. Nope, major market. Major market. 200 days. NASDAQ on top, bullish. S&P holding the watermark, letting us know where else everything goes. Here's our tug of war back and forth between small caps and large caps, with small caps being typically a bit more bullish, small caps being a bit more, or large caps being a bit more defensive. So we watch these to see if we see the blue line up a little more than the green, we're like, that's a little better. If we see the green a little, right now, this is a bullish starting point, meaning I would say like a 0.5. Now, technology's leading. This is good, but small caps are questionable. Now what? Now we start zooming in to see what happens. Oh, well, clearly there's a shift. What's the shift? Here's what's the same. The NASDAQ is still at the top, which we have already assessed as being bullish, technology leading. The S&P still right there in that second position. It's our watermark. Like, okay. And then what? Then the tug of war between defensiveness and growth, large caps and small caps. There was a pretty good shift. That from November until now, there's clearly more interest in small caps, which is growth, than there is large caps, which is defensive. Okay. We zoom in again. We go down to 66 days. And what do we see? Ooh, a little bit of a drop off in those small caps. It's back and forth, back and forth. Right here, what do we still have? We still have the NASDAQ up there at the top in a leading position with the S&P just behind, which means the fact that those have been in place in that fashion, I'm at least a 0.5. There's absolutely no way I would be anything less than a 0.5 here. It couldn't happen. The NASDAQ is leading on every time frame up until this point where we score. The back and forth is between the NASDAQ, is between the S&P. Nope. The back and forth is between the Russell and the Dow, as to whether or not we're going to see people shifting to be more bullish and moving money into the small caps, or a bit more defensive, moving money into large caps. I would say my lean is more towards where we were, which is a 0.75. But I see this one a little more on the fence. The fact that the small caps dropped, I'm like, they did drop back down a little bit now to where it's less certain who's leading. So Steven said he got to the same point and dropped his to a minus 0.25, back to a 0.5. Michael said same 0.5. Sandy said the same 0.5. Okay. I'm leaning. I mean, you can see that the small caps really have struggled on this time frame. I'm going to go to the 22. Oh, the 22. I'm gonna let the cross prevail. What does that mean? I'm gonna let the fact that this thing dipped right here. That was the final little dip that says, yep, the small caps have fallen just a little bit behind. I'm gonna join the group. I'm a 0.5 as well. Let's get my score up here. 0.5. That makes sense. So a little bit of a drop there. Maybe I said what? Maybe did we say a drop? Maybe I was in my mind. I'm like, did I say I was going to have a better score on Friday or a worse score? Now I can't remember. I don't remember now. Someone tell me what we thought we were going to be. Maybe it was we thought we'd drop a quarter. I think Steven said that. Better. We said better. Okay. Oof. All right. Let's see. Let's see how sectors holds up. This is the one that's been interesting to me. This has been very interesting. Now, first and foremost, look at this little surge. Comm services. Tired of playing right-hand man. Making a move. A little Talladega Nights move here. But both still bullish. So you can see that our big three are in place. Technology, communication services, and financials. S&P is here. Industrials has fallen off a little bit, but so have utilities and materials. Healthcare surged a little bit. And then down here we have staples, discretionary, energy. So it's an interesting mix, but a bullish starting point for me. And also continues to what? Emphasize the three sectors that we're most interested in. Communication services, first position here again. Financials right there in second. Those are two of our favorites. Industrials is back in a good spot on at least on the 133. We know technology fell off on this time frame for a little bit, but they're back up there. So now, for the top four are now our big four. Right? So I love it. Thank you for sharing that with us, Michael. Let me know if you get to a point where you're like, this is where it gets tough. So think about what we've done so far. We started out, we had a what we identified as a bullish starting point. Why? Because we had three growth sectors at the top. We had technology, we had communication services, and we had financials. Right? This is Apple, this is Microsoft, this is NVIDIA, this is Google, this is Facebook, right? This is Citi and Bank of America and Morgan Stanley and AIG, right? So this is, yeah, that's good stuff to be bullish. That's bullish when we see those. Now we get to this second time frame, 133, and it's the same three, and then we add a fourth. Who do we add? We add industrials. That's bullish. We love to see that, right? So far, this is shaping up bullish. But this is where things have gotten confusing, and I think it's been confusing for everybody. Still, there was such a weird surge in our defensives that you had this utilities pop, and you had this energy. I am actually, this is because the first two were so bullish, I am going to kick mine up a quarter of a point. Why? Because this right here. I'm going to give credit to Google and Meta for leading communication services. They've led it back into first place on the first two time frames. And you'll notice that energy, which was way up here, is now in the group. It's not a leader. Even though you see it up here, it is fallen off. And when you see utilities, it is still leading, but look, we see where it is. Where's the surge? So the momentum is there. I'm going to go ahead and score this 0.25, right? I'm going to give it the knock to say, hey, this thing is shaping up enough. And the fact that we have such a strong basis, it's not going to take that much on the 66-day for this thing to move in. Isn't utilities a bad thing? If it was high, staying high, yes. Remember, this is only one time frame. There was no presence of utilities So right now, for you to only see this, you're ignoring now the 200 and the 133, right? If you only see this high here, you're ignoring the 200, so you can't do that. Otherwise, why are you looking at those? We have to start with that as acknowledging the strength of this. Otherwise, it doesn't make sense to analyze them. We're not only looking at this time frame. We're looking at this as the culmination. So as we look at the culmination, what's happening here? Well, yes, this is the highest. Guess what? It was the same place a month ago. So what does that tell us? We're not blind, right? We're not blind to the fact that this thing hasn't moved in a month. It moved strongly here in April, and now it's up here at the top. But it's not moved. So do you look at this and say that's momentum? Of course you don't. Look at it. It's not moving. What's moving? This one. So the whole time that one's not gone, that one's moved up. And so we can't just look at the number and be like, oh, utilities is at the top. Therefore, this is utilities was nowhere on the 200, nowhere on the 133. This got one surge that we said, ooh, let's pay attention to that. And it was weird in that it was combined with energy. But the fact that energy's dropped off, this has gone sideways. Yeah, I'm ready to start moving my score up because my 200 and my 133 are so strong. That's why we look at them. You have to have that strength in the back of your mind. Otherwise, it doesn't make sense for us to be looking at it, right? Now we go to the 22 for confirmation. I just raised my score. Does this help? If I raised it at that point, if I was on the fence, if I said, I'm thinking of raising my score, what would I do? I would go to the 22 day. Now I go to the 22 day. This is the last month. What does this tell me? It tells me that technology is at the top. It tells me comm services at the top. Yeah, that says, yeah, you know what? That 0.25 was deserved. I feel good about that. And that's where my score is. Does that make sense? Like, that's why we have 4 time frames. And I feel like you have to kind of talk through it out loud to understand the story. Talk about who you saw at the top, at the beginning. And don't forget that, right? When you get to the 30, when you get to the 66, you can't be like, oh, utilities are at the top. Man, everything is terrible. What did you just see at the 133? Was it terrible? No. What did you see at the 200? Was it terrible? No. Why is the 66 the most important? No. It's where we score. But remember, we can't score till we start and build a frame of reference. So make sure you carry that frame of reference with you. If you're confident with your score at the 66, great. If you're not, go to the 22, see if it helps. Boom. Boom, sector rotation. I don't know. What do you think? Is that helping? Here's what I'll tell you. You got to be fluid with this thing. If you ever find yourself saying like, but this is this and it has to, nothing has to be anything. We have to be water, fluid, adaptable. We have to understand that rules will break, right? Where you're like, oh, if this is going up, then this goes down. Most of the time, but sometimes not. Sometimes markets can do ski-wampus things for a few weeks, a month. And so we can't be like, this doesn't make sense, and we have to be like, whoa, that's weird. What does that do to my story? How do I interpret that? How can I be flexible in the way that I understand what that means so that I'm not like, you know, we want to bend but not break, right? Be water, my friends. Okay. The VIX. I'm going to go a little over today. I will get to the watch list here in 1 second, though. We're not going to search today. No searching today. Skiawampus. I think that's a great representation, Sandy. If that's not the way it's spelled, it should be. That was excellent. Okay. Yeah. The VIX. Let's go to the VIX. There you go. Black and white only. It's tough. It's tough. There are some elements of our psychology, I believe, that we have to just kind of, convince ourselves to, like a talk. There are many elements like that, Michael, that I've been through where, I'm like, okay, I develop little scripts of self-talk for myself. Where I'm like, taking losses, man. It took me years to get where I needed to get. I think back to it, and it's like I was such a terrible, terrible person at taking losses. All right, the VIX. Interesting about the VIX. Friday, it just boom. We said it's got a long way to go to get all the way back down here. One thing that we should think about, I'd like your guys' thought. Sometimes I just sort of draw lines at like the composite low where it's like, where do I touch the most? But theoretically, this low was actually down here. It opened and it was there for like literally seconds, right? So I have a hard time because I feel like, I really feel like the higher line is the representative line. But mathematically, the low is 11.52. So what I'll tell you is this is where there's, for some people, it makes it harder. They don't want any ambiguity. They're just like, look, I want 11.52. If it gets down to 11.53, that's a higher low for me. Boom, right? I have a hard time with that. I sometimes, give it a little bit of ambiguity, which means a little bit of subjectivity. I'm okay with that. I'm okay with what happens. Sometimes it's better, sometimes it's not, right? But this higher low, remember that if on Monday the market gives us a doji, and then on Tuesday it gives us something like this thing's going to turn up like this, and we're going to have a higher low. This is now the new low. How do we know? Because it's bouncing up off of it. Higher low. That's a hedge, Bob. 100%. That's not a, oh, I'm going to think about hedging. For me, personally, that's a trigger. I will put it out as an alert. I'm going to put we haven't done it yet. I'm going to put the hedge out, and I'm going to acknowledge this is a hedge. If you have bullish trades on, you're hedging them with this. If you don't have bullish trades on, you are speculating with a downside trade, which is fine. You might say, hey, I'm fine with that. I'm going to give it a shot. Let's roll the dice and see what happens. But that is going to trigger a hedge. So right now we're like at a point where we're like, hey, I'm bullish. I'm 5.5. Everything's good. Everything's good, but then there's this, right? And we have to see how this plays out. I've got to tell you, I was nervous about it back here, right? It looked like it was ready to turn, and then all of a sudden, boom, 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 3 more days lower. Same thing could happen here. We might just get boom, 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 3 days, we're right back down. Now, for me, if it gets under 12, I'm gonna take the hedge at or near 12, right near this level. If it gets into that range, the hedge warning will take off. I don't need it to come all the way back to that 11.52 low. That's just me. Thoughts, questions, concerns. Now, to score this thing, nothing. Nothing changed, right? We haven't made a higher low or a lower low. Nothing's changed in the score. So at this point, it is a 1.25. Any thoughts? A 1.5? Got it. 1.5. I'm. It's at a 12.22. So I would not. I would never argue with someone's score. I think there are some times, like on volume, where it's like, look, empirically, we can't just score things certain ways. I think with the VIX, it has to be positive. Otherwise, what would you need to score it positive, right? Like it has to be positive. We're at a 12. We're at a 12. This thing can get down to like 9.5, but Stephen, it got down there. I don't remember when that was, 2017, 2018, maybe got down to like 9.5. But it's in a great place. It's the institutions are in a great place. There's still a sniff of escalation that I'm watching for, that I'm ready for. We're still in the summer, right? June still tends to be not a great month. But this is definitely a happy number, yes. So Billy Ray, this is one of the more confusing ones because this is an inverse correlation. The VIX is a fear indicator. And when we talk about fear, we're talking institutional fear. When the institutions start to hedge, they're so big, they create an imbalance that creates this type of a thing back here. This is what scares us, right? And we're trying to get positioned and aligned so that by the time the big part of this escalation comes, we're out. So we're focusing on down here. And so we're saying to ourselves that if this thing has a potential to give us the higher low, and then you can see when it kicks into gear, it really kicks into gear. Then that would make our number go negative, right? As this thing accelerates up, we're watching our score go down. But as of right now, that's not what's happened. What's happened is this thing has come down. We had one problem. It broke up and it took out the previous high. When it took out that previous high, that lost it a minus quarter point. That happened, I believe, 2 weeks ago. Let's see. Yeah, so right there, we lost a quarter of a point, and that's where it sits. I'm going to leave it there. I'm going to leave mine at a 1.25, which is still quite bullish, but there's room for it to get better, which means this. So if it comes all the way back down here, the score is nullified. Then if it goes up here, we have that's a lower high. That would give it a plus 0.25, and that would take it back to a 1.5. And then if it gets below this, that would give it another 0.25. That gets it to a 1.75. And then what would it take to get to a 2? I don't know. A 2? Can you imagine? Giving it the highest possible score? I don't know. Let's not get crazy. Okay, so that's where we finish up. Options are free. They're paying you to take them from you. Yay! Real quickly, I'm gonna crank through the watch list, you guys, because I do want to just see. So if you gotta go, you gotta go. I appreciate it if you want to kick around. I'm gonna go pretty fast through this thing. Apple is a no for me. Oh, my arrows are working today. Amazing. AIG's below the 50. That's a no for me yet. I think AMD is a consideration, especially like this is where it's in a basing pattern. So that could be a potential breakout trade. Amazon. I didn't like Amazon below the 50. Now that it's back above, as long as it gives a higher low, I would trade the next one. AXP I still like. So financials have some setups for us. Boeing made a new high. BAC, I think, is still viable. Citigroup is still viable. Caterpillar, not for me. CL, if you're in it, you might still be riding it, but those look like they're starting to stall out. CMG is getting a 50-for-1 split in a couple weeks. Getting excited for that. Oil is down. Costco just won't pull back, but when it does, I'm going to trade it. CRBG financials. I don't love that it's been sitting around that 50 for a little while, but it did the same thing last time. So you know what? If it goes, I'm thinking about this one. I think I'd take that Delta, no. Look at the Dow. The Dow looks like it's showing some weakness right at the 50-day moving average. EQH, that's a great looking setup. So you can see financials. Financials is probably the core sector right now for new setups. Materials are easing a little bit. GBTC easing. GE, I still like GE. That's industrial. I think there's one more trade coming here. That looks like a nice setup developing. Ready for a bounce. Gold. Ooh, gold took a hit. Gold took a hit on Friday. Google. Google started to go. I ended up getting out. I got in for a bit and then right back out. But anything above the 50, I still trade Google. HIMS overextended, needs to pull back. Here's the small caps. Home builders. Coca-Cola, nice move. If it gets a pullback, looking for another round. Meta on a pullback, I would trade as long as it stays, as long as it's a higher low. Doesn't have to be above the 50, but I would like if it did. Manulife, holding above the 50, looks good. 3M, that's a nice looking one on Friday. Anyone look to get into that? Morgan Stanley looks tradable early next week. Microsoft got a bit of a move, stalled on Friday, but it could still have some momentum. Micron could still have some momentum. Netflix, a little iffy. NVIDIA, so strong. Let's see. The Qs look good. RTX looks good, but it's at resistance, so waiting for the next opportunity, waiting for a little bit of a pullback, little concerned with the strength of the dollar here. Look at Walmart. Walmart might be moving into our trade here. So here's what I would say. I still think we're going to maybe see a little bit of a consolidation. If there's anything that's going to move outside the cycle, it's going to be in financials. So early in the week, I'm looking for financials for a new trade. I'm looking for a hedge and possibly a financial. We'll see if either of those develop. Managing a few things still. I would imagine you guys are too. Then I'll be looking for pullbacks and setups developing where? I definitely want communication services. I definitely want technology. Right? I mean, they're not there yet, but that's the next place I'm going to be looking for trades. This week, we're working on trading goals. We will put some time into it. We are working on trading goals. Trading plan outline. There it is. Trading goals. I have my new license in place. I'm so excited. Thanks again, Bob. Improvement strategies, goals. I'm actually thinking of getting rid of outcome goals. I feel like I made a concession earlier because people are like, I want a goal, I want 20% a year. That's not really a goal. I don't know. A trading plan goal should be about the trading plan. It should be about improving your trading, improving yourself, not what you want, but what you're doing to get it. I'm getting rid of it, you guys. If you've downloaded it, you'll have an archived version that has it still, but I am going to create a new version where I take out outcome goals. I kind of feel like they're a distraction from what you're really trying to do, which is get better. If you focus your attention on trading well, the results will take care of themselves. So what are your goals? Think about your trading weaknesses. Think about any observations you've made from your record keeping, from your analytics, where you're like, ooh, that's a goal. If it's an analytic goal where you're like, I want to reduce my average loss by a certain, that's an outcome goal theoretically. But that's a process-oriented analytic outcome goal. That's fine. That's on the table, right? So your goals should be derived from weaknesses to improve them. Trading observations where you start looking for patterns that say, hey, if I do X, then I should be able to improve Y or reduce Z. And then we should have goals that are derived from our analytical results, where we say, hey, I need to get my reward to risk ratio higher. How am I going to do that? Well, first place to start, reduce losses. Second place to start, improve gains. Third place, improve accuracy, which is funny because most people start at the last one, right? They're just like, oh, I'm going to get better trades. So, okay, that's it. I appreciate the extra time, you guys. It's good to see everybody. Psychology goals? Absolutely. I love that. Fantastic idea. Yeah, so we will meet regular time tomorrow. We will have cocktail hour tomorrow. You see what magic can come from cocktail hour. We fix each other's life's problems there. It extends beyond trading. You don't want to miss that for sure. And we get to see each other hanging out on camera, have a drink. Anyways, good to see everybody. Have a great rest of your Sunday. And as always, happy trading.